Welcome back to Small Caps. My name is Kerry Stevenson, and today I am delighted to be talking with Steve Promnitz. He is the CEO of Lake Resources. ASX code is LKE, Lake without the A. Steve Promnitz, first up, before we start talking, I just want to impress upon all of you that are listening to this, even though it says Lake Resources is the name, actually they're not a mining company, ladies and gentlemen. They're actually a green tech company. And Steve, I'm sure you will address that if I'm wrong, but really what you're doing is you're treating water to make a very high purity lithium product. And so first up, correct me if I'm wrong with any of that. Secondly, for those that don't know who Lake Resources are, and by the way, you should all know, because I think this is really exciting, given what's going on in the green revolution today, and that's what it's all about. Steve, first up, who are Lake Resources? Just give me a very brief what you're doing over there in Argentina.
No, you've summarised it very well, and thank you for the opportunity, Kerry. So first of all we do is treat this very salty water that's got lithium in it, and our approach is to take the lithium out, return that water back to its source. We call that direct lithium extraction. It is new to the lithium sector, but this type of water treatment has been used for 70 years. Ion exchange, half the water treatment plants around the world use it. It's just new for lithium. And as you mentioned, the beauty is you produce a very high quality product, and you do that consistently. And so by producing high quality of anything consistently, you get a premium price. And then because we return the water back to its source, and without using the traditional method, which is using evaporation, you have a much smaller physical footprint. Then we have much better ESG outcomes because it comes with a small CO2 footprint. And those two key things is what differentiates Lake in this sector. One, high quality product, that's what the battery makers want and need. And the second is doing that in a better ESG outcome. And we know that the EV makers want that. Not only do they want it, they need it, particularly in the EU, where they've got carbon taxes and things like that. Whatever they can do to lower their CO2 footprint and deliver a better environmental outcome, that's actually economically better, as well as a better outcome for their consumers.
Steve, right now, Lake Resources are using direct extraction methods over the evaporation pond model. And are you one of the very few companies that are doing that at the moment? And if you are, why aren't others doing it? Because it is, as you said just before, it's a very environmentally sustainable model.
So here's the thing. If we go back 5.5 years, only 10 or 15% of the lithium produced went into batteries. And so if only a small amount of it is battery quality, that's fine. But over the last 5 years, we've seen battery technologies just explode in their ability to be able to deliver longer range for cars, shorter charging times. And so when you do that, you need higher quality products. It doesn't matter what the product is. So if we go back 5 years ago, there wasn't an economic driver to do this. Now there is. And in the last 15 or 18 months, it's only been during that time that the electric vehicle makers are starting to say, we'd like a better ESG outcome. And it's only since December last year that legislation has come out in the EU that said, from the middle of 2024, you're going to have a stamp on your battery that says what your CO2 footprint is. So naturally, they're scrambling to see a lower carbon footprint. So this is all relatively new. And to be blunt, Lake Resources was somewhat pilloried by many other industry participants as, why the heck are you pursuing this?
Yeah.
Well, just use the traditional method. It's been around for more than 2,000 years. Just use that, come on. And we're going, the problem is, we're gonna need all of that lithium with this demand. So we don't mind which method you use, but those things are going to be a sunset industry. Quite a product that isn't high quality is going to have to get reprocessed. That predominantly happens in China. So
I was just about to say, Steve, there is high quality lithium going out onto the market at very high prices. How are they doing that currently? So they use the evaporation pond method, then they make high quality.
Yeah. So of the brine evaporators, which is nearly half the market, all of them will produce some battery quality material, and it just depends how long they've been operating or what particular method they use to ensure that they get quality. But most of the less than battery quality will then go over to East China and get reprocessed. So you're handing over a large part of your margin to somebody else, because the battery makers can't take something that doesn't suit their purposes.
So are you saying?
It behoves the producer to do that.
Yeah, of course. But what you're saying is that with your method, which is direct extraction, you potentially will have insane margins because you're not handing over the processing to a third party. Is that correct?
Let's not say it's insane, but there are other people in the industry at the moment that are making $1,500 to $3,500 margin at the moment. If we were in production, that would look more like $8,000 to $10,000 a ton. So it's pretty easy to do the maths and say, okay, so if we're in production now, we'd be looking at an annualized EBITDA of about 260 million. And that's pretty solid. That's not a gold mine. That's just from an industrial producer. But of course, you're doing that and you're doing it with an ESG benefit. And we know that's what the electric vehicle makers want.
Yeah, and I think that is key at the moment. Now you've come out today with an announcement. Let's talk a little bit about that. You are just explain what the announcement means today.
So Lake has a very large resource in Argentina, its flagship project Kachi, and then we've got 3 other projects as well. We're in a definitive feasibility study at the moment. We aim to have that finished Q1 next year, and then we move into the financing round, aiming for construction middle of next year. And we're financed through to that position. Right, so that's our bread and butter, if you like. Today's announcement was about doing further drilling, and that's to expand or to shift more of the inferred resources into measured and indicated, and in doing so, then we can support an expansion. So we're doing an expansion case study at the moment, and if we double production from 25,500, which is the current target, to twice that, then we become a very significant producer. You go into the top 5 producers, and all of that is also a relatively recent conversation. 9 months ago, people were saying, how could you just stage your development? Over the last 3 or 4 months, they're saying, Steve, what can you do? What do you need? What financing? What else do you need to double that production? And while you're at it, let's have a look at your next project, see if we could get that going. So it's quite important. Last of all, because the process is modular, it's quite simple to scale up. It's basically just more wells pumping brine, and more of these modules. They stand about 4.5 meters wide, 2.5 meters wide. 4.5 meters high, 2.5 meters wide. So just imagine a whole bunch of tanks racked up. And because it's modular, you got a double production. Okay, we'll put twice as many of them, and then we put a second production train alongside. So it's pretty exciting, because the sorts of margins we're talking about, those margins then just go through the roof. The value of the project does a whole lot more than double, and then given that we're trading, sort of 10, 12, 15% of our NPV, then that NPV more than doubles. It makes the company look pretty compelling. Yeah,
you're trading at 12% NPV. A lot of the other ones using the evaporation method are trading, I believe, above 50%. Which sounds to me like you're very undervalued. But what I want to do is I want to get a little bit into the numbers, Steve. First of all, you raised 20 million, I think it was, in January. That takes you through to construction. What do you need funding-wise to get you through into production? And where is that going to come from?
Yeah, so as you said, we're funded through to the next key investment decision. And once we had demonstrated that our high quality lithium could work in batteries, thanks to the work that Novonix did, we then went ahead and engaged intermediaries to look at debt financing. So the debt financing we're looking at using is from export credit agencies. It could be that a number of your viewers are not familiar with them, but they're like quasi-government entities that provide funding to these sorts of sectors. Ironically, they were actually set up the last time we had a global pandemic after the Spanish flu. They've got funding available. They're very keen to fund this energy transition to electric vehicles. They're even keener to fund something that's got these ESG benefits. And indicatively, we'll need to define this over the next sort of 4 to 6 months. But indicatively, that would be good for about 400 of the 540 million that we're looking to raise to get the project into construction. So normally for a company our size, that might be a bit of a push, but I have to say, with the interest in the lithium sector, the interest from export credit agencies, and also the interest from tier one electric vehicle maker and off-takers, that is looking increasingly likely.
Your share price did have a bit of a run. I think later last year it was up around the 40, 44 mark. Now we're at about 23. What's caused that decline in the share price? I'm putting my investor hat on and thinking,
okay. No, that's
opportunity, or what is there a lack of confidence? What's going on?
No, that's an entirely appropriate. So in January, February, we saw lithium carbonate spot pricing in China go up more than 100% in the space of 6 weeks. And so we saw our stock increase in value, and many other lithium stocks as well. And we were able to hold in that sort of 30 to 35 cent range for a while. We saw some of the global tech stocks roll over a little, and we saw some of the value come out of the lithium stocks. But please watch this space, because despite our good news, our share price took off when we saw an increase in lithium price, and it's our view that we will likely see an increase in lithium pricing again fairly soon, particularly in spodumene and hydroxide, and probably another leg up in carbonate. There has been some stockpiling, but one of the leaders in the sector, Benchmark Mineral Intelligence, just came out in the last couple of days supporting that. And furthermore, we saw that 2 of the large 5 lithium producers were going to be a bit short on delivering their supply in the second half of this year. So I think we're going to see another leg up. So that'll give us a lift. Then secondly, once we come out and announce who we've been talking to in the electric vehicle and battery space, we've seen other lithium stocks go up significantly with that. And that just reminds investors this project is going to happen, and the big end of town wants to be part of it.
Speaking of which, so you do have customers for your product once it's underway and you're producing, and you're looking like producing what, 2023?
So first half of 2024 is what we've got scheduled at the moment. Okay. Earliest could be the end of 2023, but most likely first half of 2024. Look, to be blunt, I think that ourselves and many other participants in the lithium sector could have probably forward sold their production 4 or 5 times over in the last few months. We've just been spending the time actually getting the household name in the electric vehicle makers together with a well-known battery maker, because it's all about the company you keep.
Absolutely.
And that makes a big difference.
2 more questions for you. There's been a change of government in Chile. Has that changed because you're in Argentina, and I believe the government in Argentina is very supportive of what you're doing. Has that meant that all eyes are more on Argentina, and of course, as a jurisdiction, that helps you in terms of end result and customers?
So the short answer to that is yes. So Chile is an excellent place to be operating for gold and copper, but it's always been a little more challenging to get permits for lithium. Then yes, there have been some government changes there. And despite some of the changes in government over time in Argentina, they have been remarkably consistent in their support for the lithium sector. It works a little bit like the US, where what happens in California is different to Texas. In much the same way, the 26 provinces will operate differently. They have their own jurisdiction, their own regulations, and then there's this sort of federal government overlay. But both the federal government as well as the provincial governments have been very supportive. We saw Gangfang recently come out saying that now they're looking at actually producing lithium-ion batteries in Argentina. We've seen their project moving ahead. They're moving into production next year. They'll be one of the largest new producers for lithium in the sector. And so they've been quite supportive. Furthermore, I must say that the province we're in has been very supportive of us pursuing a new method, and quite keen to see that underway. But I mean, they're not against using traditional methods as well. So I have to say the fact that we've got a very large project that can scale up, a method that can produce very high quality products that we know the battery makers want with an ESG benefit that EV makers want. It looks like that the funding and the funders are quite keen to do this, and those export credit agencies are going to fund at about half the price of commercial banks. And the fact that this thing can scale up and this drilling would then support a doubling of production, that's a pretty exciting space to be in. There aren't many around like that. Most of them have already got major players lined up with them. So it's this is going to be a pretty interesting space.
Steve, you've come a very long way since we last spoke. For those investors that are watching out there, I mean, you did summarize it quite well just then. I understand that the batteries have changed very much from, as you said, 5 years ago. And right now, most battery makers are looking for a very high quality product. Let's finish up now with you telling my listeners out there why now is a good time to invest in Lake Resources.
So we saw a run in our share price and in other lithium companies earlier this calendar year. And so some people benefit from that. Others might have said, oh, this thing's had a pretty solid run. To be blunt, a bit of a pullback is quite a good thing because it means that more people can get set. We're seeing a higher volume. You naturally need to take your own financial advice, but this is looking a pretty interesting space. Why? Because all the lithium stocks are probably going to go up, because we're going to continue to see increased demand, shortage of supply, and particularly this sort of quality supply with that ESG benefit. That's where Lake stands out. And around the world, there's just large volumes of money in this ESG ethical space that's looking for a home. We've had very positive discussions with funds out of the EU and the US, so that'll assist us versus others in the space. Plus, because we're producing a quality product, there's higher margin, so you get a better return. But across the board, look at this whole lithium space because it's not going away. This is the only commodity I've ever been involved in where it's actually legislated and mandated in China, in the EU, and more so in the US under Biden. So,
Biden's all about sustainability and the green revolution. And we know that Ford is coming out with a new, it's a new car, I think, that's going to...
Yes, it's the F-150 Lightning. So the mother of all gasoline munchers, one of the biggest sellers of light utility vehicles in the US, has now gone electric, and Biden announced that today. It was meant to be announced tomorrow. So if you see GM and Ford going down that path, look out, because I can tell you those things need twice the batteries that standard electric vehicles need. So buckle up.
Buckle up. There's going to be more lithium and more high purity lithium needed for these bigger batteries, for these crazy cars that are all going to be electrified. Steve Promnitz, really great to chat to you today. I'm pretty excited about what you guys are doing. And as I said right at the beginning, ladies and gentlemen, it might say Lake Resources, but really what you are is you are not a mining company. You're treating water in your very green, sustainable company. It's been a delight to chat to you today. We look forward to the news coming up in the near future.
Thanks so much. It's going to be a fun 18 months, I can tell you. Cheers for now.
So don't miss out, ladies and gentlemen. We'll talk to you soon.